Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 23rd of June. I'm Daniel Lam, your host for the podcast. The weekend escalation of the conflict in the Middle East led initially to a 5% surge in oil futures, but it has given up part of the gains at the time of the recording. The S&P 500 index futures was down by less than 50 basis points. The market reaction suggests a calibrated response from Iran, which is our base case. But we need to watch Iran's major retaliation tool, which is the closing of the Strait of Hormuz, in order to disrupt global oil flow. Now, that can affect up to 20% of the global oil supply. So OPEC can increase its oil supply if such disruption happens, but estimates show that it can cover only 7% of the global oil demand. So that's not enough to offset the disruption in the worst-case scenario. In that case, it can send oil futures to test the $90 per barrel level, last reached in the second half of 2023. Iran playing the oil card reminds me of China playing the rare earth card, except that the oil card is probably not as strong. Nonetheless, it comes at a sensitive time for Trump, when the US 10-year yield is at an elevated level due to concerns about the US budget deficit, and the narrative of de-dollarization has been gaining grounds in the investors' community. Elevated oil prices in the short term and the high correlation between oil prices and US inflationary expectations ties the hands of the Fed in cutting rates. US strikes add to global uncertainties that can dampen business sentiment and weigh on investment and hiring decisions. Oil importers, particularly in Asia, face greater challenges from a sustained rise in oil prices in a downside scenario. So this can reignite inflation at a time when many EM central banks are easing policies. This, again, shows the importance of diversification in your portfolio in 2025. Portfolio diversifiers, such as gold and alternatives, come in very handy in such an environment. But volatility does provide opportunities for investors to be adding exposure to global equities, which we're overweight. And we shall be highlighting the opportunity as events unfold in the Middle East. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.